So this is going to be the third and final video for how to do this comprehensive question in Excel. Now it's time to do the income statement. So let's look to a revenue. For January, I'm going to look way up to our sales in dollars up here. Our COGS is going to be equal to the sales in units times 150, because 150 was that case fact. Now, gross profit is going to be a calculation of that minus that. Now, some of these items we already have, so let's sort of make it easy on ourselves. Selling and admin was up there. Wages was also up there, along with rent. Now, amortization, that was a case fact of 2,500. So we don't even need to calculate something there. Now, at this point, we're going to do gross profit minus sum of all these figures. And don't worry, I will make it pretty afterwards. So we're up to that point. Long-term interest, we were already calculated up here. Short-term, we also did that one. Now that is going to be the difference between earnings before interest and tax less our interest payments. Tax expense is going to be that figure times 25%. And net income is going to be our earnings before tax less our tax. So a lot of these formulas we will be able to copy over. So all of the amounts here, because we were taking from above, work. Also, all of the amounts here, with the exception of amortization, we'll just watch to see if that one hops or does anything funny. And it looks like we are okay. Same thing down here, and of course I will be making it look pretty in just 1 second. Much better. So we'll just have it to the 2 decimal places at this point. Now let's do our statement of retained earnings. So in that, what we want to do is we want to start off with our beginning retained earnings. We want to add our net income, consider the dividends, oops, there we are, and ending retained earnings. So our beginning retained earnings, we can pull from that other, or I guess our opening balance sheet. So I'll just put the figures right here. 108 is our opening. Then our net income, oops, we didn't do our total. So let's go up here and quickly do our total. So that plus that. Going to be the easiest one. There we are, it looks much better. So our net income is going to be just that one. Dividends, we know were 40,000, that's a case fact. Ending, so we want to take our beginning plus our net income minus our dividends. Well, let's just make sure it has the same decimal. Now, moving on to our balance sheet. Now, this will be our last statement. So let's start listing out some of the items. And you know what, we're sort of lucky because we already have it provided in the comprehensive actually case question. So I will lay it out in a similar fashion. So we have our assets, cash, AR, inventory, capital, and cumulative amortization. Over here, we will have our liabilities, which will consist of AP, taxes payable, our short-term loan, our long-term loan, and at the bottom we will have, I can put it up there. Let's do common shares and retained earnings. We can make these just a bit bolder so we can see that they're headers. Now let's figure out our cash. So we are going to look to our cash figure right there. AR we already calculated, so let's go up and grab it. There it is. Next, our inventory balance. So this is going to be coming from our purchases schedule, right here, our inventory value. Our capital. Now this is going to be sort of the starting figure of 300,000 provided, plus our office modernization of 100K. Our cumulative amortization is going to be our starting point of 100,000 plus our 5,000 that we've done to date. Now this is going to give us our total assets. Let's just try to drop a few lines here. Total assets here is going to equal that plus, and less the 105. So we should be coming up with a nice figure of about 1.1 million. Now on the AP side of things, we've already calculated this, so let's just go up and grab it. Our AP amount. Next, we need to get taxes payable. Now this one's a little bit tricky. So we want to note that we start off with 37,000. Then from there, we want to add the fact that we've paid, and it shows us up here, our 58,000, less the $50,000 we've done in installments. So you should be around 45,000 for this one. So now on to that short-term loan payable. We can hop up to our cash budget over here, and we have our 2382. Long-term loan is still remaining at 80,000 as we have not paid that down. Our common shares, it's going to go back to our beginning balance because we haven't really done much with common shares, so it's nice and easy. Retained earnings is coming from the statement we just calculated. And let's make this a little bit prettier. And we can sum that up. And fingers crossed it also comes out to 1151. So this is how we walk through the comprehensive question in Excel. Hopefully this will have been very helpful for you, especially in your midterm prep. Good luck, everyone.